When a person's awarded a TPD insurance benefit inside of their superannuation fund, it's essential for that person to understand a number of complex and interrelated issues in a short period of time. My name is Craig Stubbs and I'm a Principal Advisor here at TPD Claims Advice. In this video, I'm going to outline what you can expect from a TPD assessment consultation with one of our experienced financial advisors. We specialise in TPD superannuation claims, and this is a key difference when compared to other advice firms. You'll start to get a sense of our deep understanding of these issues right from the outset with your first interaction with any member of our staff. It's what we do. When a person's awarded a TPD insurance benefit inside of their superannuation fund, it's essential for that person to understand a number of complex and interrelated issues in a short period of time. You should never make a withdrawal from superannuation without talking to a qualified advisor first. Once funds are withdrawn from super, the damage is often done and cannot be reversed. However, we do appreciate there is very often the need for a quick decision once a TPD claim has been paid into a superannuation fund. And this urgency is often driven by circumstances outside of your control. For example, you may need to pay legal fees, you may need to retire debt, you may have time limits placed on you by the super fund. Some of those time limits are for the super fund's convenience, by the way, and others are real time limits that you need to attend to. In some cases, you might just need the funds for everyday living expenses. And so we understand this urgency, and it has led to the development of our unique TPD assessment consultation format. So making sure that clients are educated and informed before making such an important decision, that's what we do. Before your consultation, you'll notice that we ask you for some pretty important details. These are essential to working out your tax and other issues that I'll discuss in a moment. So we'll ask you for your eligible service date, your date last worked, your date of birth. We'll ask you for your account balance and any other details that you have on your benefit or claim. We'll also arm you with information about how to ask for your eligible service date in particular. The reason that we add this extra layer of questioning is that you will likely find that call centre staff at major superannuation funds do not know what this date is. They won't know why you are asking for that date, and they will very often give you an incorrect date. So we give you a couple of techniques to make sure that they're giving you the information that you're actually asking for. What needs to be understood by all TPD claimants is that your super fund will often get your tax calculations wrong. So during the consultation, we will ask then you a series of questions to help us understand your situation, and so we can discuss the implications that might apply if you're withdrawing money from superannuation. Now, I cannot cover the complexity in this short video about the different issues that can be triggered by a superannuation withdrawal. They are different for every single person, including the tax rates. So the first thing that we cover, the thing that most people want to discuss, is the tax. And so our TPD assessment consultation will allow you to ensure that your super fund is doing their job correctly. We'll explain to you how a TPD tax-free uplift works, and we'll put this in writing showing how the calculation works for you based on the dates that you've told us. You should not trust the tax calculations done by your superannuation fund. They will often be incorrect. We'll then also go on to discuss how this TPD tax-free uplift can work if you want to leave money in superannuation. The superannuation system has a lot of opportunities for people who have been awarded TPD status in a fund. And again, you need to understand those before you make any withdrawals. So whilst tax is an important issue and the TPD tax-free uplift is equally important, whether withdrawing or not, there is a long list of issues that we'll cover with you via questioning and our professional experience. These include, and not limited to, things like Centrelink, other insurance claims and how they interplay with a TPD benefit withdrawal, other super funds, the possibility to merge and sometimes not to merge, Medicare surcharge levy and how that might apply if you're making a withdrawal. There's also an additional tax for high income earners that you can cause from a withdrawal for contributions into super. That's called a Division 293 tax, and that can be triggered as a really nasty surprise come tax time at the end of the year. Family tax benefits can be reduced or completely lost. Child support payments can be impacted for both those paying and receiving. Childcare subsidies can be diminished or lost or paid back. HECS and HELP repayment debts can be triggered. Public and community housing can be affected by a withdrawal. Certain work cover schemes can be impacted. And of course, perhaps if bankruptcy is applicable or looming, you really need to pause before you take money out of superannuation. Then, of course, we've got all the, what I say, unusual superannuation schemes that we're across. So there's a myriad of funds that perhaps have untaxed elements and components. They're often government funds. There are defined benefit funds. There are a lot of then very unusual insurance arrangements attached and linked and owned by various superannuation funds. So you need to understand what these are before you start making any decisions about a withdrawal. We'll then also canvass opportunities for people who wish to retain money in superannuation and paint what is possible as opposed to a withdrawal. So you've got some idea, at least before you close the door on some of those ongoing opportunities by withdrawing the money. So personally, my experience is I have worked in superannuation and financial planning for 30 years. My first job out of uni was in fact calculating TPD tax-free uplifts by hand before the use of computers and automated systems. So I've got a deep experience with how this works, and over the course of 50 odd minutes in a TPD consultation, you will benefit from that experience and understanding about how all of this works for you. My colleagues are equally well qualified with a deep and rich history in TPD superannuation matters as well. So we hope to see you for a TPD assessment consultation at TPD Claims Advice.